Alright guys, the price bounce of this triangle, the top part of this triangle, we almost touched this line. Well, you can draw it in different manner, so I would say that, you see, I even drew it not that accurately, so we pretty much touched this line here and bounce off that line down. In fact, it wasn't that strong, and we basically almost immediately returned to the area around the top of this channel. So it's very convincing and like looks very bullish that the price didn't make a very huge drop, and it still looks pretty much like we're about to grow even more. So I would actually expect this to touch this line at some point, but it may not happen. It may happen that we will test it once again, and as soon as we're testing that many times, at one certain time this will be broken and we'll have a lot of room to grow. So another point is that if you look at the moving averages, 50 days moving average and 100-day moving average is about to intersect finally. Just again, one small tick upwards, we'll see this intersection, golden cross will happen, and we will go up. But very interesting that if you look at the total capitalization, first, this has already happened just right now, today, this intersection, we need one more tick and then we can see this golden cross. Also, volume at this area is really high. We didn't see such high volume starting from December 2017, January 2018, and at some point you may expect that, okay, the volume is high after the growth, and then it would mean that the price may go lower because huge players are selling their positions after the growth. But this volume actually started to grow already from the beginning of the rise of the price, so not really at the top, which is a very good sign. Also, most of the volume is from altcoins market. So if you look at the total capitalization with the Bitcoin capitalization excluded, you will see that again this volume is here. So the volume from total capitalization comes from the altcoins market. You see, it means that people are ready to take the risk. Maybe it's actually the accumulation finally, I would hope so. And moreover, if you look at the moving averages here, then you would see that this golden cross already happened a few days ago. So let me zoom it a little bit more. You see, it's already happened. So we are about because of this green candle, so we are about to see the continuation of this growth. Very interesting. Moreover, if you look at the longs, they are very low now comparing to the previous level, which would imply that it's actually easier to go up when the longs are so low. So in principle, in this situation, there's not so many people who are going long, so huge players would only win if the market will go up, and then people will start to enter long position. And at the same time, shorts are slowly increasing. The same thing again, while it's sort of an indication of people are getting bearish at some point, but it seems like it's easier to liquidate those shorts for getting some liquidity for huge players on the market. So very interesting what will happen within next few days. And one more interesting thing I would like to share with you guys. There is an indicator called Meyer multiple, and basically this is the ratio of the price and 200 days moving average. And basically what is about Meyer multiple is that it also shows interesting behavior. Namely, as you can see here, the bottom in 2015 was associated with a very low value of Meyer multiple, and a lot of people who are analyzing this indicator behavior for this current bear market, they're saying that no, we see how high we are and we still need to go somewhere at this point to be sure that this is the bottom, and after that we can go up, and so on and so forth. Guys, what I'm thinking about it. First, the market getting more and more mature. This top in 2013 is much higher than the recent top. This is because the capitalization is higher, so the 200 days moving average cannot move the same pace as before, so those oscillations would be smaller and smaller. The same way, we may expect that the lows would be higher and higher. So this was pretty low, now we may expect it to be higher. Also, if you look at the behavior of the price after the top in 2013, you will see that there is a certain line, and the price almost touched this line 1-2 times, and then it went very low, much lower than this price, and then very soon it returned back. So you can see similar thing happened in 2018 when we had this pretty much the same level. So we went down and then bounced off of this line, and then once again we basically broke this line downwards, and then very soon returned above this line, and now we're trading above that. So very similar as before. Also, again, you can see that this low is a little lower than this one, again because of the market is getting bigger and bigger. Another point is that you can see that also we had this average value of this indicator, and after the bottom, this low of this average was somewhere in few months later than that, and then it started to grow. We have very similar situation right now. So if this average of the Meyer multiple will start to grow, that would be pretty much the same as before. And finally, you may see the pattern of this part of the Meyer multiple. So you see the drop, return, correction, up, correction, drop, return, correction, up, and now we're starting to draw this correction again. Very similar than this one. Again, scale is a little bit longer, but again, you may expect this to happen. So guys, not a financial advice, but it seems like this is another piece of the puzzle showing that we may very likely to have this bottom already set in December last year. Thank you very much for watching. Hope it was useful, and hope to see you again tomorrow in the next update. Goodbye.